Imagine this, darling. You're checking your phone over your morning coffee, not scrolling through emails or Instagram, but watching your investment account tick up. $847, $1,203, $2,156. Not from your paycheck, not from a side hustle, from dividends, from stocks you bought years ago that are now paying you to own them. That's not fantasy. That's what I'm about to show you how to build. Starting with just $100,000 and 5 strategic picks you can buy right now through Fidelity. Now I know what you're thinking. $100,000? Betty, I don't have that kind of money just sitting around. Stay with me. Because here's what most women don't realize. You don't need $100,000 in cash today. You need a strategy that gets you there and then turns that $100,000 into something that looks a lot more like $1 million. And we're going to do it with the sophistication of a perfectly curated capsule wardrobe. No guessing, no gambling, just 5 investment pieces that work together to build the kind of wealth that lets you wake up whenever you want. Let me be honest with you, most financial content is designed for men in suits who already have money. It's boring, it's jargon heavy, and it assumes you have a finance degree and unlimited capital. That's not us. We're the women who understand the value of an investment piece. We know that one perfect Chanel jacket beats 10 fast fashion trends. We get quality over quantity, and that same strategic thinking, that's exactly how we're gonna build this portfolio. So grab your latte, get comfortable, and let me show you exactly how to turn $100,000 into a Luxe $1 million portfolio that pays you thousands every single month without you lifting a finger. Here's where we're building a dividend growth portfolio. Think of it as the Hermes Birkin of investment strategies. It appreciates in value over time, it pays you dividends for owning it, and it becomes more valuable the longer you hold it. This isn't day trading, this isn't crypto gambling. This is the strategy that wealthy families have used for generations to build and maintain wealth, and you're about to get the blueprint. The 5 stocks we're choosing aren't random, they're strategic. They're like the 5 essential pieces every sophisticated wardrobe needs. The blazer, the white shirt, the black trousers, the perfect pump, the timeless bag. Each one serves a purpose. Each one complements the others, and together, they create something far more powerful than the sum of their parts. Let me introduce you to your 5 Fidelity gems. These are companies you already know, companies that have been around for decades, companies that aren't going anywhere. We're talking about Johnson & Johnson, the healthcare giant that's been paying dividends for 61 consecutive years. This is your classic blazer, timeless, reliable, works in every season. Procter & Gamble, the consumer goods powerhouse behind Tide, Pampers, Gillette. This is your white button-down. You use their products every single day without even thinking about it. Realty Income Corporation, the monthly dividend payer. They literally call the monthly dividend company. This is your perfect black trouser. Consistent, dependable, shows up when you need it. Verizon Communications, the telecom leader with a dividend yield that makes your savings account weep. This is your power pump. Steady strong gets you where you need to go. AbbVie, the pharmaceutical innovator with a dividend growth rate that's absolutely stunning. This is your statement bag. High quality, high yield, high impact. These aren't sexy tech startups. They're not going to triple overnight, and that's exactly why they're perfect. Because we're not building a portfolio for thrills. We're building a portfolio for wealth. Real, sustainable, generational wealth. Let's talk about how this actually works. Because I need you to understand the mechanics. This is where most financial content loses women. They throw around terms like dividend aristocrats and dare I invest in without explaining what any of it actually means. Not here, we're breaking it down like we're drawing on a napkin at brunch. A dividend is simply a portion of a company's profits that they pay out to shareholders. You own the stock, they pay you. It's like owning a rental property that sends you a check every quarter. Except you don't have to fix toilets or deal with tenants. The company does all the work, you collect the payment. Now here's where it gets interesting. Most companies pay dividends quarterly, 4 times a year. But Realty Income, they pay monthly every single month. Like clockwork, they deposit money into your account. That's why they're in this portfolio. Because monthly cash flow feels different than quarterly. It feels like income, it feels like freedom. But we're not just collecting these dividends and spending them on lattes. No, darling. We're reinvesting them automatically through something called a DRIP, a dividend reinvestment plan. Think of it like this: every time you get paid a dividend, instead of taking the cash, you use it to buy more shares of the stock. Those new shares pay dividends. Those dividends buy more shares. Those shares pay more dividends. It's compound interest on steroids. It's your makeup collection that replenishes itself. This is the secret that wealthy families understand and most people miss. The money makes money. The money makes more money. And 30 years from now, you're sitting on a portfolio that's worth multiples of what you put in, generating income that rivals your salary. Let me show you exactly what this looks like with real numbers. We're Zycus worth $100,000. That's our foundation. Now I know that sounds like a lot, but here's the thing. You don't need $100,000 today. You need a plan to get there. And once you understand how powerful this strategy is, you'll be motivated to get there faster than you think. Maybe you're starting with $10,000 and adding $500 a month. Maybe you're starting with $25,000 from a bonus and contributing $200 weekly. Maybe you're rolling over an old 401k. However you get there, once you hit that $100,000 mark, this is what we're doing with it. We're splitting it across our 5 stocks, $20,000 each. Equal weight, simple strategy. $20,000 into Johnson & Johnson at around $160 per share gives you approximately 125 shares. J&J currently yields about 3%. That's $600 in annual dividends, paid quarterly $150 every 3 months, automatically reinvested to buy more shares. $20,000 into Procter & Gamble at around $155 per share gives you approximately 129 shares. P&G yields about 24%. That's $480 annually. Not the highest yield, but P&G has increased their dividend for 67 years. That's not a company, that's a legacy. $20,000 into realty income at around $58 per share gives you approximately 345 shares. Realty income yields about 55%. That's $1,100 annually, paid monthly $9,167, hitting your account every single month. This is the stock that makes you feel like an investor. $20,000 into Verizon at around $40 per share gives you approximately 500 shares. Verizon yields about 65%, that's $1,300 annually. This is your high yield anchor, the stock that pulls serious weight in your dividend income. $20,000 into Spoofing at around $175 per share gives you approximately 114 shares. AbbVie yields about 35%. But here's the kicker. They've been growing that dividend by double digits annually. That's $700 this year. But in 5 years, could be $1,200. In 10 years, could be $2,500. This is your growth engine. Add it all up. Your $100,000 portfolio is now generating $4,180 in annual dividends. That's $348 per month, every single month, without you doing anything. Your portfolio is paying you. Now, I know what you're thinking. $348 a month isn't life-changing, Betty. You're right. It's not yet. But watch what happens when we let time and compound interest do their thing. Year 1, you've invested your $100,000. You're collecting $4,180 in dividends, which are automatically reinvesting. You're also adding $500 per month, $6,000 per year because you're committed to this strategy. You're treating this like a non-negotiable bill. Netflix gets $15 a month. Your future gets $500. By the end of year 1, your portfolio is worth approximately $112,500. You contributed $106,000 total. You're up $6,500. That's a 61% return. Not bad. But we're just getting started. Year 5, you've been consistently adding $500 monthly. Your dividends have been reinvesting. Your portfolio is now worth approximately $165,000. You've contributed $130,000 total, $100,000 initial plus $30,000 over 5 years. You're up $35,000. That's a 269% gain. Your annual dividend income now around $7,200. That's $600 per month. You're starting to feel it now. That's a car payment, that's a vacation, that's breathing room. Year 10, you're still adding $500 monthly. Your dividends are still reinvesting. Your portfolio is now worth approximately $265,000. You've contributed $160,000 total. You're up $105,000. That's a 656% gain. Your annual dividend income now around $12,500. That's over $1,000 per month. That's renting many cities. That's a mortgage payment. That's the beginning of financial independence. Year 20, same strategy, $500 monthly contributions. Dividends reinvesting. Your portfolio is now worth approximately $680,000. You've contributed $220,000 total. You're up $460,000. That's a 209% gain. Your annual dividend income now around $32,000. That's $2,666 per month. That's a salary, that's freedom, that's the point where you start making different decisions about your life. Year 30, you're still here, still consistent, still letting the strategy work. Your portfolio is now worth approximately $1,450,000. You've contributed $280,000 total. You're up $1,170,000. That's a 417% gain. Your annual dividend income now around $68,000. That's $5,666 per month. That's more than most people make working full time, and you're generating it by owning 5 stocks. Do you see what's happening? You turn $280,000 in contributions into $1,450,000 in wealth. That's not luck, that's not inheritance, that's not a lottery ticket, that's compound interest, that's dividend reinvestment, that's the strategy working exactly as designed. Now let me address what you're thinking, because I can feel the questions coming. Betty, what if the market crashes? What if these companies cut their dividends? What if I need the money before 30 years? Valid questions. Let's talk about them. Market crashes, they happen 2008, 2020. They're scary, they're painful, and they're also when this strategy shines brightest, because when stock prices drop, your dividends buy more shares. Think of it like shopping at designer sample sale. The quality didn't change, the price did. When Verizon drops from $40 to $30, your $1,300 in annual dividends suddenly buys 43 shares instead of 32. More shares means more future dividends. More future dividends means more future wealth. Market crashes are sales, and we love a good sale. Dividend cuts. Yes, companies can cut dividends. It happens, but that's why we're diversified across 5 different stocks in 5 different sectors: healthcare, consumer goods, real estate, telecom, pharmaceuticals. If one cuts, the other 4 are still paying. And we specifically chose dividend aristocrats and dividend achievers, companies with decades-long track records of not just paying dividends, but increasing them. These aren't startups. These are institutions needing the money early. Life happens, emergencies happen, and that's okay. This isn't a prison sentence. You can sell shares anytime. You can stop reinvesting dividends and take the cash. You can pause your monthly contributions. The strategy is flexible, but here's what I need you to understand. Every year you stay in, the more powerful it becomes. The first 10 years are about building, the second 10 years are about accelerating, the third 10 years are about wealth that changes your family tree. Let's talk about the individual stocks, because you need to understand what you're actually buying. These aren't just ticker symbols, these are businesses, and when you own stock, you own a piece of the business. Johnson & Johnson, this is the Chanel of healthcare. They've been around since 1886. They make everything from band-aids to baby powder to pharmaceutical drugs that treat cancer. They operate in 60 countries, they have 140,000 employees, they generate $95 billion in annual revenue, and they've increased their dividend for 61 consecutive years. 61 years through recessions, through wars, through pandemics. They kept paying, they kept increasing. That's the kind of stability we want in a portfolio. Janja yields about 3%, which isn't the highest on our list, but that's not why we own it. We own it for reliability, for consistency, for the fact that in 30 years, when you're living off dividends, Janja will still be here, still paying, still increasing. This is your foundation stock, your bedrock, your I can sleep at night holding Procter & Gamble. This is the white button down of consumer goods. You probably used 5 P&G products before you left the house this morning. Crest toothpaste, Oakley moisturizer, Tide detergent, Pampers, diapers, Gillette razors, Bounty paper towels. They own 65 brands. They operate in 180 countries. They generate $80 billion in annual revenue. And they've increased their dividend for 67 consecutive years. Think about that, 67 years. That means they were increasing dividends during the Great Recession, during the dot-com crash, during the 1970s stagflation, during every market downturn you can name, because people still brush their teeth during recessions. People still wash their clothes. People still buy diapers. E&G sells necessities, not luxuries. And that's exactly why it belongs in this portfolio.
P&G yields about 24%. Not thrilling, but the dividend growth rate is around 5 to 7% annually. That means your $480 in annual dividends today becomes $780 in 10 years, $1,270 in 20 years, $2,070 in 30 years. That's the power of dividend growth. The yield on your original cost keeps climbing.
Realty Income Corporation. This is the stock that makes you feel like a landlord without the headaches. Realty Income is a REIT, Real Estate Investment Trust REIT. They own over 11,000 properties across the US and Europe. Retail stores, restaurants, warehouses. They lease these properties to tenants like Walgreens, FedEx, Dollar General. The tenants pay rent. Realty Income pays you. Here's why this stock is special. They pay monthly, not quarterly. Monthly, every single month you get paid. It's the closest thing to a paycheck you can get from a stock. And that monthly cash flow, it's psychologically powerful. It keeps you engaged. It reminds you why you're investing. It makes the strategy feel real.
Realty Income yields about 5.5%. That's $1,100 annually on your $20,000 investment, $9,167 per month, and they've increased their dividend 123 times since going public in 1994. They literally call themselves the monthly dividend company. That's not marketing, that's identity, that's culture.
Verizon Communications. This is your high-yield anchor. Verizon yields about 6.5%, which is nearly double the average dividend stock. That's $1,300 annually on your $20,000 investment. This is the stock that pulls serious weight in your dividend income, especially in the early years. Now, Verizon isn't a fast grower. The stock price isn't going to double, but that's not why we own it. We own it for the yield, for the cash flow, for the fact that everyone needs cell phone service, and Verizon is one of only 3 major carriers in the US. They have 143 million subscribers. They generate $136 billion in annual revenue. They're not going anywhere. The dividend growth rate is modest, around 2% annually. But when you're starting with a 65% yield, you don't need aggressive growth. You need stability. You need reliability. You need a company that's going to keep paying you while the other stocks in your portfolio grow. Abivo. This is your growth engine. Abivo is a pharmaceutical company that spun off from Abbott Laboratories in 2013. They make Humira, one of the best-selling drugs in the world. They make Skyrizi and Rinvoq, 2 blockbuster drugs treating autoimmune diseases. They're investing billions in research and development, and they're growing their dividend aggressively. AbbVie yields about 35%, which is solid, but the dividend growth rate, around 8 to 10% annually. That's double dividend growth That means your $700 in annual dividends today becomes $1,510 in 10 years, $3,260 in 20 years, $7,040 in 30 years. This is the stock that supercharges your income in the later years. Yes, pharmaceuticals come with risks, patent cliffs, regulatory challenges, competition, but AbbVie has a deep pipeline of drugs in development. They're diversified across multiple therapeutic areas, and they're committed to returning cash to shareholders. Since spinning off in 2013, they've increased their dividend every single year. That's the kind of commitment we want. So here's what your portfolio looks like in action. You've got $100,000 split equally across these 5 stocks. You're adding $500 monthly, you're reinvesting all dividends automatically through DRIP, and you're not touching it, you're not checking it every day, you're not panicking when the market dips. You're treating this like the long-term wealth building strategy it is. In year 1, you're collecting $4,180 in dividends. That's reinvesting to buy more shares. You're adding $6,000 in contributions. Your portfolio grows to $112,500. In year 5, you're collecting $7,200 in dividends. Your portfolio is worth $165,000. You're starting to see the momentum. In year 10, you're collecting $12,500 in dividends. Your portfolio is worth $265,000. You've officially crossed the $250,000 mark. In year 20, you are collecting $32,000 in dividends. Your portfolio is worth $680,000. You're generating more in passive income than most people make working. In year 30, you're collecting $68,000 in dividends. Your portfolio is worth $1,450,000. You've built a 7-figure portfolio that pays you a full-time salary, and you did it with 5 stocks and consistent contributions. That's not fantasy, that's math, that's compound interest. That's the strategy working exactly as designed. Now let's talk about the practical side, because I know you're wondering how to actually do this. You're sitting there thinking, okay, Betty, I'm sold, but how do I buy these stocks? How do I set up DRIP? How do I make this happen? First, you need a brokerage account. Fidelity is perfect for this strategy because they offer commission-free trades and free dividend reinvestment. You open an account online. It takes about 10 minutes. You link your bank account, you transfer your money, and you're ready to invest. Once your money is in your Fidelity account, you search for each stock by ticker symbol: Johnson & Johnson, J&J, Procter & Gamble, PG, Realty Income, Verizon VZ, ABV, ABBV. You buy shares of each. If you're starting with $100,000, you buy $20,000 worth of each stock. Fidelity allows fractional shares, so you don't have to worry about buying exact whole numbers. You can invest $20,000 and get exactly $20,000 worth of stock down to the penny. Next, you set up automatic dividend reinvestment. In your Fidelity account, go to Accounts and Trade, then Account Features, then Brokerage and Trading, then Dividends and Capital Gains. Select Reinvest in Security for each of your 5 stocks. Done. Now, every dividend you receive automatically buys more shares. You don't have to think about it. It happens in the background, like magic. Finally, you set up automatic monthly contributions. Link your bank account. Set up a recurring transfer of $500 or whatever amount you can commit to on the same day each month. Then set up automatic purchases of your 5 stocks. Fidelity allows you to create a basket of stocks and automatically invest in them proportionally. So every month, your $500 gets split across your 5 stocks, buying more shares, increasing your position, compounding your wealth. That's it. That's the entire setup. 10 minutes to open the account, 20 minutes to buy your initial positions, 5 minutes to set up DRIP and automatic contributions. And then you're done. You've built a wealth building machine that runs on autopilot. Let me address some of the questions I know you're asking, because I want you to feel confident about this strategy. What about taxes? Great question. If you're investing in a taxable brokerage account, yes, you'll pay taxes on dividends. Qualified dividends are taxed at capital gains rates, which are lower than ordinary income rates. For most people, that's 15%. So if you earn $4,180 in dividends in year 1, you'll pay about $627 in taxes. Not fun, but not devastating. And here's the thing, you're building wealth. Taxes are the cost of success. Would you rather earn $4,180 and pay $627 in taxes, or earn nothing and pay nothing? I'll take the former. If you're investing in a Roth IRA AE3, you pay no taxes on dividends or capital gains ever. The money grows tax-free and comes out tax-free in retirement. The catch? You can only contribute $7,000 per year to a Roth IRA as of 2024. So if you're starting with $100,000, you can put it all in a Roth immediately.
But you can max out your Roth every year and build this strategy inside it. In 30 years, you'll have a 7-figure Roth IRA generating tax-free income. That's a dream.
What if I can contribute $500 monthly? Then contribute what you can, $250, $100, $50. The strategy works at any contribution level, it just takes longer. The math still works, the compound interest still works, you're still building wealth. Don't let perfect be the enemy of good. Start where you are, increase contributions when you can. The important thing is consistency. What if I want to retire early and need the income before age 59 and a half? If you're investing in a taxable brokerage account, you can access your money anytime. No penalties, no restrictions. You can sell shares. You can stop reinvesting dividends and take the cash. You have complete flexibility. If you're investing in a Roth IRA at OAT year, you can withdraw your contributions, not earnings, anytime, tax-free and penalty-free. And if you're using the strategy to retire early, you can use the rule of 55 or a Roth conversion ladder to access funds before 59 and a half without penalties. There are ways, you just need to plan. What if one of these companies goes bankrupt? Unlikely, but possible. That's why we're diversified across 5 stocks in 5 different sectors. If one fails, you lose 20% of your portfolio. Not fun, but not catastrophic. The other 4 keep paying, the other 4 keep growing, and you keep contributing, buying more shares. Rebuilding diversification is your safety net. Here's what I need you to understand. This isn't a get-rich-quick scheme. This isn't crypto. This isn't day trading. This is a slow, steady, boring wealth-building strategy that works. It works because it's based on math. It works because it's based on companies that have been paying dividends for decades. It works because it's based on compound interest, the most powerful force in finance. You're not going to wake up tomorrow with $1 million, but you are going to wake up in 30 years with a 7-figure portfolio that pays you a full-time salary. And that's worth more than any lottery ticket. Think about where you'll be in 30 years. You'll be in your 60s, maybe retired, maybe still working, but on your terms, and you'll have a portfolio generating $68,000 annually in dividends. That's $5,666 per month. Every month, without you working, without you stressing, without you doing anything except owning 5 stocks. That's financial independence, that's freedom, that's the life you deserve. Now let's talk about the psychology of the strategy, because the math is easy. The hard part is sticking with it. The hard part is not panicking when the market drops 20%. The hard part is not selling when your neighbor tells you about the hot stock that's going to triple. The hard part is not selling when your neighbor tells you about the hot stock that's going to triple. The hard part is not selling, staying consistent for 30 years. Here's how you do it. You change your mindset. You stop thinking of stocks as pieces of paper that go up and down. You start thinking of them as businesses you own. When you own Johnson & Johnson, you own a piece of a $400 billion healthcare empire. When you own Procter & Gamble, you own a piece of a $350 billion consumer goods giant. When you own Realty Income, you own a piece of 11,000 properties generating rent every month. You're not a trader, you're an owner. Owners don't panic when the stock price drops. Owners see it as an opportunity to buy more at a discount. Owners focus on the business fundamentals, not the daily price fluctuations. Owners think in decades, not days. This is the mindset of wealthy families. They buy assets, they hold assets, they pass assets to the next generation. They don't trade in and out trying to time the market. They don't chase trends. They don't panic sell. They own quality businesses and let time do the work. That's what you're doing. You're building a portfolio of quality businesses. You're collecting dividends. You're reinvesting those dividends. You're adding contributions. And you're letting time and compound interest turn your $100,000 into $1,450,000. Let me paint you a picture of what this looks like in real life. It's 30 years from now, you're sitting on your couch, sipping your coffee, checking your phone. You open your Fidelity app, your portfolio is worth $1,450,000. Your annual dividend income is $68,000. Your monthly dividend income is $5,666. You didn't win the lottery. You didn't inherit money. You didn't get lucky with a tech stock. You bought 5 boring dividend stocks and held them for 30 years. You reinvested the dividends. You added $500 monthly. You stayed consistent. You stayed disciplined. You stayed the course. And now you have option. You can retire early. You can work part-time. You can start a business. You can travel the world. You can help your kids. You can donate to causes you care about. You can live on your terms because you have a portfolio generated income that doesn't require you to show up to an office every day. That's not fantasy, that's the result of this strategy. That's what happens when you combine quality dividend stocks, automatic reinvestment, consistent contributions, and time. So, here's my challenge to you. Stop waiting for the perfect moment. Stop waiting until you have more money. Stop waiting until you understand everything. Start now. Open the Fidelity account, buy the 5 stocks, set up DR, set up automatic contributions, and let the strategy work. You don't need to be a financial expert. You don't need to watch CNBC every day. You don't need to read earnings reports. You just need to be consistent. You just need to trust the process. You just need to give it time. The difference between where you are now and where you want to be isn't luck. It's not intelligence. It's not connections. It's one decision, the decision to start, the decision to invest, the decision to build wealth instead of just dreaming about it. You've got the blueprint, you've got the 5 stocks, you've got the strategy. The only question is, are you ready to start? Because 30 years from now, you're going to be somewhere. You're going to be in your 60s. You're going to be looking back at your life and you're going to have one of 2 stories. Story 1, I wish I had started investing back then. I wish I had bought those dividend stocks. I wish I had been consistent. I wish I had given it time. Or story 2. I'm so glad I started investing back then. I'm so glad I bought those dividend stocks. I'm so glad I stayed consistent. I'm so glad I gave it time. Because now I have a 7-figure portfolio generating income that changed my life. Which story do you want to tell? The choice is yours, darling. The strategy is here. The stocks are here. The opportunity is here. All you have to do is take the first step, open the account, buy the stocks, set up drip, set up automatic contributions, and let time do the rest. Your future self is waiting. She's sitting on that couch, sipping that coffee, checking that portfolio worth $1,450,000. She's grateful, she's proud, she's free, and she's thanking you for making the decision to start today. So what are you waiting for? Let's build this portfolio. Let's build this wealth. Let's build this life. You deserve it. You're ready for it. And it's time to make it happen. Welcome to your Luxe $1 million portfolio, darling. Let's get started.